In this episode, we speak with Dina Said Dwyer, founder and managing partner of Eden Capital Management, a New York-based private equity firm focused on scaling private companies at critical inflection points in technology, business services, and education. Founded in 2015, Eden Capital partners with founders and management teams to grow businesses with proven, scalable models, deploying $20 to $75 million through flexible investment structures. Drawing on over 40 years of international investment expertise, Eden provides strategic and operational support to drive growth and value creation. With more than 2 decades in the private equity industry, Dina was recognized by GrowthCap as a top healthcare investor of 2025. I'm your host, RJ Lumba. We hope you enjoyed the show. If you like the episode, click to follow.
RJ Lumba is the managing partner of GrowthCap and the executive chairman of Market Insight Media. He is the host of Growth Investor, a podcast featuring today's best investors, executives, and founders. In the minutes ahead, we'll uncover insights and strategies for accelerating growth and succeeding in business.
Dina, thank you so much for taking the time to chat with us today. It's a delight to be with you.
Thank you, RJ. It's a pleasure being here with you today.
Very excited for this because it's not always that I get a chance to speak with a firm founder. And for every firm founder that's lasted the extent that you have, approaching a decade, there's many who have not gotten to that point. What would you say, do you think has been key to your ability to continue to grow and evolve the firm?
So 2 things there. I think one is team, and the second is funding. I think like any startup, everybody underestimates the time and the effort that this takes, and we're no different. We have a fantastic team. I'm very lucky to have the partners that I've had on this journey, both internally and then in our portfolio companies. And the funding we've had with very supportive LPs. And so in that, we're very lucky.
You know, it's a pretty bold move. And as I was looking at your background, I mean, you had some nice early experience at Carlyle and Blackstone. And then you made the decision, it seems, to start your own firm. Was that a difficult decision? What gave you the confidence to kind of embark on this path?
Yeah, so to share a little bit of background, I started in Blackstone in 2000 and have been investing in private companies ever since. When I started, private equity was not as crowded as it is today. Just to give you a sense of the growth in the industry overall, buyout firms today own more than 10,000 US companies, and that's more than double today the number of domestic US exchange listed public companies. So it's a huge industry, and that evolution, has been really fantastic to watch. And we today as an industry manage over 4 trillion. So really impressive growth. What that means for firms like us is that there's a lot more competition. And in that size bracket, you see a lot more firms that are competing after the same assets, which creates a much shorter timeline for us to do the due diligence and the work that we used to do, at the beginning of this industry. And so over time, that mid-market has become really crowded, which created an opportunity for teams like us to go and look at the lower middle market. So we invest in companies in that 3 to 15 million EBITDA in 3 sectors: technology, business services, and education. And that's where we've spent most of our time. That area is less crowded. There's more opportunities for operational work and growth. And the investment process aligns well with the strength of our team.
Mm-hmm. And when you started with the firm, was it with a distinct focus on the sectors you're currently focused on?
Absolutely. In terms of size and in terms of industries, we've been focused throughout, and we will continue to stay in this size range as the firm grows. We have a very distinct playbook that's really well fitted for this size range. And we've also built an operational network that works well with companies in this size range. Could we inch up a little bit to 25 million of EBITDA? Absolutely. But really being that first institutional capital alongside the founder is an area that we're very well suited for, both operationally and temperamentally, because there's still a lot that can be done. And perhaps that's an area that we can discuss a little bit here. Coming from larger firms and looking at the lower middle market, what we need is very different from the next size up. we need a ton of operational work, and we've built that over the years. I think that was, one of the big surprises. Everything needs to be built up when you're that first institutional capital, from finance to that C-suite around the founder or the founding team, and really professionalizing every function. What you find in a founding team is that fantastic entrepreneurship and that willingness to do everything across the firm. But then when we come in, you really have to get those functional experts and get accountability across every single role where one person is responsible for sales, marketing, getting a CFO in, rebuilding that whole finance function to give the KPIs and the visibility internally. And then for us as the private equity owner and for our LPs. So you have to build the engine while the plane is flying. And we've become really adept at that and have surrounded ourselves with the team members and the tools to do that for a number of companies now.
Excellent. And you invested in a company that's fairly well known to all the investment bankers out there, which is Wall Street Prep, very well known kind of education company. Can you tell us a little bit about that? Like how that investment came to be, how maybe you helped the company, and I believe you've exited.
That's right. It's a recent exit. Wall Street Prep is a great story. It was a founding team. We worked closely with Matan and Arcady and Alex and Scott that had been working together for a very long time. And we are really happy with the outcome there. The business, as you mentioned, and doesn't need introduction probably on this podcast, but does training for financial services. And through our ownership, we've certainly built out the team and added some of those key functions in marketing and in finance, particularly. But they also added a number of new business lines where they have the B2B, B2C, and B2U. And in addition, we've added a certificates business. We partnered with Wharton initially to build a private equity course, and that did incredibly well. We wanted to address that same population that we were training in that first year coming out of school and continue to follow them and serve them throughout their careers. And so after a few years, you might be thinking about going into private equity or real estate or other fields. And so with Wharton, we did that initial private equity course and then built out 7 other courses. And that doesn't cannibalize the underlying business because it's a different segment of the population that wants this certificate to show that they're ready for the next leg of their career. And it's a great revenue source for institutions like Wharton. In fact, now we just launched an AI program with Columbia. So we're expanding this across universities, and it addresses a need out there in the market for people who might not go for the 4-year undergrad or 2-year graduate program as an MBA student, but still want that certificate to show that they're proficient in the market they want to go into.
So when you initially kind of started evaluating whether or not to invest in Wall Street Prep, were you already starting to formulate the expansion plan and how you would enact that? What kind of gave you maybe the insight into this company being a good investment opportunity?
So this is a market we know well and a product we all know well. So it was an easier evaluation than some of, let's say, our technology or healthcare businesses, where ultimately we've all been through these programs, and we knew the customers. So in that sense, Wall Street Prep had a great product market fit, and we believed in the team and continue to believe in them. In fact, we've exited to Riverside, and the founding team is intact. I think there's that perception out there with founders that inevitably when you bring private equity, you lose control. Chances are you lose your role and your job. And I don't think that that's always true. And some founders scale very well as this team, and they still have a lot of gas in the tank. They're ambitious and capable and all super smart, and they'll do very well in this next round and beyond. And some founders have struggles adapting to that accountability, that level of insight into their business, and there it becomes harder. So that's something we really look at initially is, can this team scale and what do they need around them? We're always looking to help the team, but they have to have a willingness and an ability to scale and build the infrastructure for the next size up, right? We're asking a lot from our management teams in a very short amount of time. When you think of the private equity timelines, I think that's the hardest piece, is the accountability and the amount of different work streams that have to be compressed in a shorter timeline to achieve the kind of returns and outcomes that we want for our companies and for our investors.
So did they come to Eden and say, like, here's our plan of how we could use the capital and really scale up the business? Or was it more so you saying, we know this space really well, we know how to help you strategically and operationally? How did that all kind of come together?
We position ourselves as partners to management teams. So they know the business better than we will ever know it. But it's important that it's a partnership where, both sides can bring ideas to the table and, prosecute them. We're all looking to find the right answer together. And in fact, when we underwrote the business and when we were competing it was a banked process, we had 4 opportunities that we were talking to that could have been M&A opportunities. So we thought this would be a consolidation play. And the team was very excited about that, and we won the mandate. And then as we advanced in our deal together, we looked at these opportunities, and the management was very wise in saying, we can do this internally. A lot of the things that we saw in other companies, we felt like we could build them better without the headache of M&A. So M&A is typically a very big part of our playbook at Eden. We've done 21 deals on 5 platforms. So as you can see, consolidation in these small size deals is really important to us. But we're not dogmatic about it. In the end, with Wall Street, they made a good case that they could take the best of from what they'd seen in outside processes and build capabilities internally. And in fact, from that came the certificate program, which is wildly successful and a big part of the story going forward. So we make plans and we have an investment thesis. And going in, like I said, we both thought we would do M&A. We ended up doing something completely different, and we adapted to the market and to the management team. And I think that's the partnership we want to build with founders.
Would love to switch over into healthcare. Could you tell us a little bit about your investing in healthcare?
Absolutely. We have 2 companies that operate in healthcare. We have Etc., which does online training for regulated trades, of which a big part is healthcare. And then we have another business called Intelvio. And I'll dive into that a little bit more because that's also a great example. So Intelvio was initially phlebotomy training specialist. It's a business that teaches how to draw blood. It was in 80 locations across the country. So very entry-level skill in healthcare. When we met with the founder, he had been building the business over decades and was very knowledgeable about this particular vertical, but we saw an opportunity to build out across allied health fields. As you know, there's a massive shortage in healthcare professionals. And so getting people from outside fields into healthcare and getting them on that first rung of the healthcare ladder is very important. And PTS at the time, now Intelvio, was a great way to do that. In addition, we saw an opportunity to build out a B2B business. Currently, all of our students are paying themselves. And while these are not very expensive or lengthy programs, that is a big barrier to entry for folks. If they're working in hospitality or retail, and you're telling them you're going to have to take a couple of months without pay and come and have tuition, that still is a barrier. And so if we want to get more people in these fields, getting the corporates involved is an important piece of the equation, and understanding what they need and where they need it. So if we're training phlebotomists in California, but they're needed in New York, that's not very valuable, right? And so if we can locate close to some of these centers, whether it's labs, Quest or LabCorp, that need this personnel, on a regular basis, or as we built out other allied health fields, working with hospitals and other groups in healthcare, I think we can get a better product market fit, understanding where people are needed and in what fields, and training them for that and then placing them creates a nice flywheel that we've done in other businesses. And so we're very excited about the opportunity there. In terms of the operational work, we have done 2 things. One is building out the team, both at the board level and within the management team, and then M&A. So I'm happy to dive into more on that. And that's part of the Eden playbook. We've already doubled EBITDA in the 2 years of ownership. So you really see that playbook at work and working alongside with the team to help them scale the business in direction that they couldn't have foreseen, without the help of Eden and the board members that we brought in.
Hmm. And, we talked about in the beginning of the conversation how overall private equity has gotten really competitive, but maybe less so competitive in the lower middle market, but there is still competition there. What is it that you'd like to highlight to management teams when you're in a competitive process? So if a team is looking at, say, 4 or 5 different firms and you really want to point out the difference in partnering with Eden, what would you say to them?
Two things. One is the partnership approach. I think it's really important. These companies are smaller, and so you really have to come in as a partner. You can't afford to go in and break things and then miraculously rebuild. I think that partnership approach and that willingness to work alongside the management team is really important, and to be a value-added partner. We can't hire for every single one of these functions, right? These are small organizations, so while we can improve some of the key functions, having board members or resources outside of the organization that can be helpful to the business to scale the operations, I think is a big part of the value add that we bring to the companies. And we adapt that. While we have a playbook, we also adapt it to the needs of every company, and we adapt the board composition and we adapt the resources to each company. And so it's quite a bespoke process, even though we've got a framework that's set. We position ourselves as these partners.
Excellent. We're heading into the tail end of the conversation. I have two final questions. Before I ask those two final ones, I do like to touch on kind of the personal background of each of our guests. And when you were younger, maybe in your high school or college years, did you always think you would go into something finance related?
I did. My family was already in finance, and so that was definitely the path. I went to Wharton undergrad. I loved math. And so coming out of school, you kind of had a couple of paths. The reason I chose private equities, I love working with people. So, the other path would have been hedge funds or investment banking. And so in private equity, you really get to work with the business and help them build the business. So that's the other piece. I love seeing those businesses get built up, and that build piece is very exciting. That is something that I tell everybody that wants to join Eden. You've got to love the operational work, or this is not going to be a fun ride. We spend a lot of time and we're always available for our management teams. And so these two pieces are really important to me. And outside of work, the same things that I do at work drive me also personally, where my passions are aligned. I devote my time outside of work on initiatives that support education and healthcare. And I also work on causes that promote human rights around the world. So I feel like our work at Eden is aligned with those motivating forces that I had from being in high school and college.
Excellent. Last two questions. One is, can you tell us about a person who's had a profound influence on you?
Sure. So my father is the quintessential entrepreneur. He's had 3 careers and in fact came to this country with 2 suitcases. I took my kids, his grandkids, to Ellis Island with him recently and found his entry. And from those 2 suitcases, he built successful careers across various fields. And so what that taught me at an early age is the power of determination, resilience, hard work. He's 92 and still goes to work every day. And so that's a fantastic example to follow. And I think also what gives me this passion for working with founders, having seen it my whole life, I think I have the temperament and the ability to work with founders because I understand it at a deep level. Having been in that seat myself, having observed closely family members go through this, and then through my professional upbringing, learning what it takes to build these organizations to success.
Excellent. Last question. And we touched on this just a moment ago, but could you tell us about a charity cause or other endeavor that you're passionate about? You mentioned a handful. Maybe is there one in particular that you tend to spend the most time in?
So I've got it top of mind because I was there yesterday. I sit on the board of Columbia School of Public Health. And in times like today, having just come out of a pandemic, I'm really proud of the work that institutions of public health like Columbia do around the country and also around the world. And I think it's really important work. So not to pick favorites, I love all the work that I do outside of Eden where I spend my time, but this really touches upon education, upon healthcare, and key passions for me.
Excellent. Well, Dina, I want to thank you so much for taking the time to chat with us. This has been a wonderful conversation.
Thank you, RJ. It was a pleasure being with you today.